All right, back to work we go. Stop counting all that money over there. We got one more day left. That's a rookie mistake, by the way. Don't go counting your chips until the closing bell on Friday. I'm kidding with you, but great job today. Fantastic week it's been. I got some good news for us. We have a slingshot reversal setting up for tomorrow on the S&P and the Nasdaq. Now, most of you know this already, but if you don't, slingshots can make these massive short squeezes. We might have the biggest move of the week tomorrow morning to finish off the week here. So I want to talk about, first of all, what is a slingshot so you know how to find them in the future, how to time the entry, where the eggs are going to be. That's the easy part. We're going to cover some variations tonight because tomorrow is Halloween, end of the week, end of the month. Things might get a bit cray-cray end of the month, right? So we'll cover some variations. This is going to be a fantastic video, start to finish. If you like making money, make sure you watch all the way to the end. Charts look beautiful right now, my best charts of the week here. So enough of the intro, right? Let's dive in. Let's make some more money on what's been just a remarkable, it's been a fantastic week, a fantastic month. I'm almost sad it's the final day of the week tomorrow. S&P SPY ready to go tonight. Nasdaq triple Qs are ready. Glad to see you are ready here as well. I've got 4 clues on these charts telling me where I think the money is made tomorrow. First clue is right here on the hourly time frame. I like to use the hourly chart as a directional filter. It is easy to see right now the buyers are in full control. Momentum, that's our directional bias. I have a couple more clues on some tick charts, our lower time frame. Before we do that though, let's check schedule for tomorrow. Couple things about tomorrow. We are not going to get that personal income number at 8:30, right? Unfortunately, that'd be a great catalyst tomorrow, but the government shutdown continues. Hopefully next week they'll get their act together there on Capitol Hill and get the government reopened for us, as if anybody's even noticed. It was closed the whole time, but I digress though. We do have some news tomorrow, the Chicago PMI at 9:45. That is the only news we have of the day that we know about at this point. Donald Trump will keep us on our toes, I'm sure, so we'll keep an eye on the news feed for tomorrow. But the big thing on my mind for tomorrow, though, is tomorrow's the end of the month, end of the week, right? So we oftentimes get a lot of volatility into the end of the month, and I tend to trade smaller size, smaller position size. If I come in tomorrow morning and I see ATRs all kicked up, the candles are wild, if things are getting wild, if I'm trading like an 8 contract, position, I'll cut that in half to a 4 contract position, right? Just my personal opinion. You can do whatever you want tomorrow, but just be aware, things do tend to kick up a little bit as far as volatility end of the month as traders take bigger risks. Back to our charts though. I got more clues here on the charts. Both the S&P and Nasdaq are pretty similar here right now. So all the stuff we mentioned on the S&P right now can be applied pretty much on the Nasdaq. First clue was the higher time frame direction. But the slingshot is setting up right now on the tick charts, and tick charts make everything easier. Technical analysis easier, entry patterns easier, trade management, everything's easier on tick charts. Get yourself some tick charts. That is a 7,000 tick chart, upper left-hand corner. And the only indicator you need, don't overcomplicate this stuff. Too many indicators, it's too many voices in your head. You're always second guessing more indicators. So 21 EMA is the only tool that we need here. Now, this is where we start seeing that slingshot, because the first clue we have right here is this range right here. What makes a slingshot is a bullish market overall and a bearish range. Because what do ranges do? They like to rotate. They're going to rotate off that low, and this is where slingshots come from. I call them slingshots. The formula is we're bullish overall on the higher time frame, and it's a bear range, right? And we know that ranges like to rotate, right? Like that range right there. We talked about that in last night's video. We know that ranges like to rotate. That was a beautiful bear trap. You can't see it very well here, but if you're with us in our trading this morning, right, on our entry time frame, the 1,000 tick chart, the entry time frame, that really was a beautiful, we talked about that last night. So one big clue here is this range right here and that rotation off the low. Second clue, little tiny range right here. Now, if you're with me in my trade room, I call these bookend ranges, because what happens oftentimes is the range in the middle. This is a pretty cool phenomenon actually. At the range in the middle, we oftentimes will do this. We'll run lower, range here, run higher, range here, right? And we call these, I call them bookend ranges. And we wind up kind of tossing around back and forth between those smaller ranges, right? As the bigger range rotates. I call them bookend ranges. But the bottom line right now is that range, what does that range want to do? It wants to break out pullback. It wants to rotate the amount above, the amount below. Okay, right? That rotation, very, very important clue there. And that leads me to the final clue we see right here, which is that gap down there. Now you notice I haven't talked a lot about that gap this week because, gaps by themselves, gaps don't really matter, at least to me. I have this thing in our trade that says out of sight, out of mind. Out of sight, out of mind. Once I can start seeing that gap down there, now that becomes a bit of a psychological magnet. Just like the all-time high. Once the all-time high starts to come back into play, once we can see it, it's almost like it kind of has that gravitational pull to it. Out of sight, out of mind. Okay, so those clues here, one of my favorite trades for tomorrow would be, I would love to get a run going lower and a bear trap down there. And again, you can't see it very well right there, but that was a big move off that low this morning. Beautiful trade this morning in the morning trade room. A lot of you guys made bank on that. But I'm gonna look for the same exact pattern, right? As we run lower, I'm looking for another bear trap down here. One try, two try, and really it could be here. The gap will be great. Anywhere around, let's say 41 or lower is fair game here on a bear trap. And when I say bear trap, what I'm doing is I'm letting those bears try a couple times and then using their stops to fuel that move going higher. And then from there, this range is going to want to rotate, right? The amount below, the amount above is going to want to rotate all the way back up and kind of slingshot higher, right? Going higher here. Now, very important, pay attention. As it does that rotation, we now want to start adding to our winner. The way we add to our winner is separation off that moving average, a higher high in price, and I want to get in right below that low. So now imagine what's happening right now, right? That range, a bear range is slingshotting, right? This range overall is also slingshotting, right? Going higher. This could be a very strong squeeze up off that low, somewhere down around that gap fill. In our trade room, we call this a bear trap and an add-on as we go higher here. All right. Now, we may not get that. Again, these are pretty, this range rotation is pretty strong, right? As it goes higher here. So if we do keep going higher, the most important thing going higher will be if I can get separation and a higher high, I can start taking nibbles, as we call it, right? Small positions, right? 2 contracts, 1 contract, right? Small nibbles there. Once we complete that pendulum swing, once we finish off that rotation, now that area, that is a bag of cash just sitting right there, begging to get picked up. So we now look for what is usually a 2-legged pullback, that area here, and another kind of a classic breakout pullback we talked about last night on the video. It's a bear trap off the top of that range. We run those stops, right? And again, same thing. After you get that short squeeze, after you stop those bears out, just add to your winner. And of course, the goal is 2 things. 1, to go back to retest that interim high, and 2, to finish off, the pendulum swing, and of course that big all-time high targets up overhead, right? So if we do roll higher here, that's the formula I'm watching as we go. Now, I have a couple different variations of this I want to go over with you because, again, tomorrow's the end of the month, so things do get a bit cray-cray sometimes, end of the month. Before we dive into that, though, let's pit stop for a second because I know most of you guys watching right now, you guys know these patterns. You're making money with these already, right? But if you're here for the first time right now, what is an add-on trade? What's a bear trap? What's a slingshot, right? This might be a brand new strategy for you. Don't you worry. I teach this entire thing in much more detail in my free trading course. In fact, guys, I have a ton of examples of all of these entry patterns inside of that free video course. What I'll do is I'll put a link up top here for you, upper right-hand corner. Hit that little link that popped up there. Take that free trading course because the strategy you'll learn in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. Remarkably simple technique. More importantly though, we make our money by timing good entries, don't we? So in that free video series, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back in your trading. guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're missing the best moves each day, if you've lost your confidence in your current strategy, don't wait any longer, guys. Hit that link that popped up there. Watch that free trading course. You're going to love all the trade examples I include in that short video series. It's perfect for binge watching this weekend while you're handing out candy here to the kids on Halloween. The best part is it's completely free for you. Be aware too, folks, too. I'm going to put all the important links you'll need to learn the entire roadmap. I'll put all those below tonight's video, the description down there, below tonight's video. Start first on the free video course. You'll love that. Most folks start making money all on their own, all from that free video class. So start there first. And don't forget too, the good stuff is every morning in our trade room, 8 o'clock Eastern time. We trade this stuff together in real time. I'll put all that membership information for you below the video tonight, description of the video. And if you're on Twitter or X, I post a lot of mindset stuff and videos and charts on the X platform in between these videos. I'll put that link down below as well. Give me a follow. You'll love that feed in between these YouTube videos. So if you're watching for the first time right now, that's where you want to go to dig in more in detail of these entry patterns. I'm covering the basic stuff here right now. Okay, let's talk about some variations of this. For example, if you're a student of mine, you know this already. But if you're not, so when ranges rotate, right? When ranges rotate, you'll notice I have this channel kind of lined up right there. Okay, this may not be the final channel, but when I think about a range rotation, I always think about. Let's get rid of this channel here for a second. When I think about a range rotation, what I always comes to mind here is finding some type of channel off the high, off the low, and then getting in underneath a prior swing. Okay. Now I don't know exactly what this channel will look like or where it'll be, but this is what usually makes the most consistent money in a range rotation, right? So again, we're trying to kind of connect some of these. Right, some of these highs over here. I'm trying to connect off these highs, bring it down around that low. And as you know, in my trade room, I'm always looking for ways of getting in off the low of that channel, okay, and right below a prior swing. Okay, so now if we're lucky, it'll go something like this. It'll kind of pop up and begin to grind, going higher like this, right? Then I'll know exactly where that channel is. I could draw a trend line off the highs, see that? Draw down off that low, and again, the real like bag of money would be, it's the breakout pullback zone, right? It's one of these lows right here. It's right there, right? Get underneath that low, get below that 21 EMA, trap in some bears, right? Let those rookies let the rookies dig their hole, right? We don't pick bottoms. You can if you want to, but it's very difficult. It's tough to get lucky picking bottoms consistently, all right? I would rather miss the bounce sometimes. I would rather miss the trade to get myself a higher percentage trade, right? Because if I can trap the bears in, then I can use their stop losses to squeeze running higher right from there. So, again, I don't know exactly what that will look like right tomorrow, but that's kind of my vision, right? I think that will be the best way to do this. If I can string together, if I can combine the breakout pullback off that range along with a channel, again, almost like fish in a barrel, right? That should be an easy money trade right there. And again, when you come off those lows, I know it's tough sometimes, and I try to remind folks as much as I can in the trade room, remember to add to your winner, right? The add-on, once you learn to add to your winner, you know where the market wants to go, right? You know it wants to complete that pendulum swing, right? So until we get to that area, it's the bear trap, it's the add-on, and we're cashing checks up around the highs of that trading range. The other scenario that would really be easy, I think, and we talked about this earlier, what kind of the bookend ranges, right? So imagine now we run up here, range up here now, okay? Range up here now. There's kind of two ways to think about this, okay? One would be the range is like right here. It's not that big of a breakout going higher, right? It's small pop up. We might end up hitting at that high right there, right? The bears are trying to short back down again and they can't, right? It goes sideways right there. In this case, so we always talk about context, right? Context. I want to buy relatively low, right? I want to buy low, right? That is context, right? Buy low. In this example, buying low is buying off of that range right there, right? We break out, we pull back, and we use the current range for a rotation. We use the previous range for a breakout pullback, right? Okay, so that I think makes sense. Again, same bear trap down there. And again, we're rotating now up off of that low, add to your winner. I know this, I repeat myself a lot, but these patterns work a lot. So trading really is repetition, right? Trading is repetition over and over again. Same entry techniques, but just different ways to apply them, right? Like a good chef, right? Same ingredients, but different techniques depending on what dish he or she is trying to make, right? So that would be one scenario for a pop-up into a trading range. But let's take that one step further though. If we were to really punch up higher here, right? Really punch up higher, and now the range, because this makes a lot of sense, right? This makes sense. Something happens overnight, it rips up higher, and we wind up chopping around up higher here. Now again, buy low, right? The saying is buy low. Well now, I would love it. But now the breakout pullback there it's a little bit unrealistic, right? Now, would I complain about that? Of course not, right? I would not complain about that at all. I would love that trade still. But what is more, right? And again, it'd be a bear trap there, right? And back up from there again. But the reality though is, if it really rips off this low, if it really kind of separates off that moving average, right? Big strong move up. Now what's more likely now is this range, right? That range. We're buying low, we're buying the next range underneath us. Make sense? Okay? I wouldn't use this range if the new range is down here. Makes sense, right? If the new range is right there, now we use the previous range below, we're trying to buy low. All right, that's what I was trying to say here with that example there. So now this area, now that range becomes a breakout pullback zone, and really in all reality, you get all these highs, that high, that high, that high. It could be any of these, but just remember that little small technique we talk about a lot here in these videos here is, if it's a deep pullback, it'll be a 2-try bear trap down there, right? Deep pullback, 2-try bear trap. Okay, but watch closely here, because this part's very close, very important here right now. If it's a shallow pullback, let's say off the 13 level, for example, now I'm not buying low, am I? I'm buying relatively high right now. So the small adjustment, which we talk about a lot in these videos, is a technical trap, right? What's a technical trap? A technical trap, similar, right? It's bears once, higher high, bears twice, and we're getting in below that low. Okay, now why? Why do I make a small adjustment there? Well, because now I'm buying underneath a swing rather than buying as we go higher, right? If I buy as we go higher, yeah, there's a good chance it will work, but it's not nearly as attractive of a trade, right? And again, if you're relatively high up here right now, I want to buy as low as I can, right? Context is important. I want to buy as low as I can. And if all this shallow pullback, I want to be in the green on that trade before I get too high, because sometimes it'll run up and get cracked right back down again, right? Into that over resistance. I want the entry to be underneath that low, right? So we go up, deep pullback, bears once, bears twice, right? I've got a lot of reward to make on that, right? A good risk reward ratio on that one. I can be pretty aggressive on that trade. If it runs up though and shallow pullback, see now we're not buying low, right? Now buy a shallow pullback here, right? And again, in this example up here, I would want there to be a range up here, by the way, right? There'd be a range in this scenario. I wouldn't take that trade right here, right, without that range up there, right? The scenario is we pop up, we go into a range up here now, and we're popping lower. It's a small little technical bear trap. And again, if that doesn't make any sense to you right now, that free video course I mentioned earlier, again, great for binge watching this weekend. That'll be the entry off of that low. All right, guys? So Again, some very simple techniques, but a couple more advanced tactics, and hopefully it all makes sense. Any questions, just drop me some questions down in the comments section below. And remember, do not let a move lower, do not let that fool you, right? We are way high up right now on the hourly time frame. It would not surprise me at all if we went one more leg lower and right back up again. All they're doing right now is they're simply kind of driving lower, and the buyers are accumulating more as it goes lower. What happens is after these big moves, with these big moves like this, they buy the dip, they buy the dip, they buy the dip, they buy the dip, and one of them, right, one of them will eventually just rip and run back up to retest the high. That's all that's going on right now, right? So as it goes lower, do not let a strong run down the tick charts. Do not let that fool you into the bigger picture on the hourly chart, where the hourly chart is still very bullish overall. So that's the basic principle for the S&P. The Nasdaq is very similar, right? Like I said earlier, the Nasdaq very, very similar. And so first of all, you need to see, right, we're definitely bullish overall. Remember, the higher time frame's direction, right? The higher time frame is direction right now. We don't want to confuse that with our tick charts. And by the way, before we dive into the Nasdaq deeper here though, if you're enjoying tonight's video, please help me grow this channel by hitting that like button for me, hit that subscribe button for me, set those notifications, share this video link with other trading buddies. Hopefully you guys enjoyed enough to share it. I know we're all busy people these days. I know it's Halloween. I get that. I appreciate you guys tuning in and watching all my video lessons. So as always, thank you guys so much for the likes, all the subs, all the love I get in the comment section. I really appreciate each and one of you guys watching here every evening on the YouTube channel. All right, I'm done begging for likes and subs. Let's now go tick charts here right now. A 4,000 tick chart, and you can kind of see right away what's going on, right? There's that range right there. There's that range. And again, what makes a slingshot is a bull market overall and a bear range. Because what happens is the price goes lower, right? Price goes lower, the bears chased after it, they get squeezed and it just snaps, right? It slingshots right back up again. And I'm telling you right now, oftentimes these things just rip, right? They just keep on ripping, okay? So that's why I said earlier, good news for tomorrow. Now, the Nasdaq doesn't really have that gap, right? The gap is out of sight, out of mind. Would you agree? The gap is so far away right now, it's out of sight, out of mind, right? If the gap is right there, remember, out of sight, out of mind, right? Once it comes within reason, now it acts as a magnet, right? Makes sense? Gaps are not enough to cause me to want to short something like this right now, right? Gotta be a good reason to do it. Okay, got that out of the way there. And then this little range right here, again, think about these bookend ranges, right? Range down there, range right there. So same basic stuff here on the Nasdaq, right? As we go higher, if we're seeing separation off this moving average, I'm taking nibbles, right? Nibbles off of that low. Then we're looking for, is it going to be that two-legged pullback for that breakout pullback? Again, I'm not going to bore you guys with all the entry tactics I talked about earlier. Same entry tactics, same bear traps, add-ons, like we do every morning in the morning trade room, like you guys are learning in our free video classes. So breakout pullback off of that. If we're really lucky though, again, there'll be a channel here somehow, right? There'll be a channel, right? Hopefully it'll keep on grinding. Give me a better channel here, connect off those highs, down around that low, combine off that breakout. I mean, come on, right? Like that is just a bag of cash, just begging to get picked up, walk over, pick it up right there. Same thing, right? Bear trap, add on as we go, same stuff over and over and over again. And if we go sideways here, right? That range right there, I'm probably not going to use this range, right? If we did, by the way, it'd be what? It'd be a technical bear trap, right? A technical bear trap below a low. Why? Because you want to buy low. You're not buying low in that situation, right? You're not buying relatively low. In that situation, you're buying relatively high. What I'd rather do is small range right there. We use the prior range below that, right? Use that range. See, now we're buying low. Now we can trade that rotation going higher from there. And if you learn one thing from these YouTube videos, I hope it is how to use symmetry, right? The amount above, the amount below, right? These things work over and over and over again. The key is though, you got to learn how to find the ranges, right? You got to learn how to find the ranges. We do a lot of that work together in our trade room. The trick is rotation. The trick is rotation. Come practice with me for a few weeks in the morning trade room, and you'll be an expert at range rotations there as well. So leave a runner. I don't care if it takes handcuffs, duct tape, gotta leave the office, but leave a runner. Leave a runner. Turn that brain off. Put your target at that final target. Put that stop the point of entry. And again, just leave the office if you have to, right? Go get some coffee at Dunkin' Donuts, something like that. Let that thing run, right? It's it's difficult sometimes. It's not easy because our brains, if given so much time to think about stuff, we find excuses to cut these trades early. I know I'm not the only person that does that. I'm sure I'm not. Anyways, so let it run. And again, excuse me there. And again, if we really rip higher here, right now, up to a range up here, again, now that range right there, now that range is the one, right? That's the one we want with those bear traps from there. All right, guys, that is the game plan now. That's the game plan for tomorrow. Now, speaking of tomorrow, every morning, 8 o'clock Eastern time, the place to be, the trade room. Guys, the easiest way, start making repeatable, consistent profits in these marks. Come on, learn and trade along every morning at the opening bell. As always, I'll put all the important links you guys need in the description of this YouTube video. Start first on that free trading course. You're gonna love all those trade examples. Great for binge watching this weekend over the holiday week. I guess holiday weekend's tomorrow, right? Then come join me, the trade room, and we'll do it together. In the meantime, guys, it's been a fantastic week, a fantastic month. Let's finish up strong. Don't force those trades. Remember, if it's wild, smaller position sizing, right? Or do whatever you want, right? As always, be well though. Be nice to each other. Stay in the green tomorrow. And as always, be here next time. Adios, amigos. Bye for now.